Hey guys, good morning, good morning, good morning. It's been a while, and thank you so much for all of you who reached out to ask me why I've not been posting videos for the past few weeks. It's because I've been extremely busy, but I'm glad we're getting back today, this morning. So we're going to be taking the commentary for the dollar index and foreign currency as usual. And we're starting with the first most important thing every trader needs to do before you even start analysis on the charts. It's important that you take a look at the economic calendar of events on forexfactory.com. And it's important for you to study the calendar for the week, especially because it's just the beginning of the week. This is Monday, 20th October 2025. So you need to go through the week and outline news events that you shouldn't be trading, either you're trading prop or on your live account. I'm talking about news events like the FOMC, CPI, and the NFP. NFP is usually first week of the month, first Friday of every month. But this month we've not had the NFP news release because of the US shutdown. So we've not had that press release yet. Okay, so this is Monday. When you go through the calendar, you can see there's nothing significant as touching the dollar index and foreign currency. Okay, all the news are medium impact news affecting the CNY pairs and the Canadian dollar. The orange boxes signify medium impact, the yellow boxes signify low impact, and the red boxes signify high impact expected. Okay, when you go through Tuesday, you can see we have high impact on the Canadian dollar and medium impact on euro. On Wednesday we have CPI on the GBP and medium impact on euro. Then Thursday we have medium impact on Canadian dollar, medium impact on the dollar. Then on Friday we have CPI on the dollar. You see that? So we're going to be expecting some level of crazy price action this week, especially because of the CPI on the dollar coming on Friday. So price action may start to pose some level of consolidation or spikes between Wednesday, Thursday ahead of the CPI on the dollar on Friday. Okay, usually when there's a news event like that, the markets present what we refer to as the seek and destroy patterns, candle wicks that are fast, and they take you out when you're shorting, they take you out, and when you're going long, they also take you out. Okay, so they take you out when you're selling and they further sell, then they take you out when you're buying and they further buy. Okay, so these are news events you should be cautious of while you're trading this week. Then we go to the chart, and the first thing we need to do is to look at the dollar index, which is the benchmark asset for the dollar and dollar associated currency. For the purpose of beginner traders, I like to just summarize the relationship between the dollar and the dollar associated currency. The dollar index is actually the benchmarking asset. It means it's the main driver. Every other dollar associated currency will respond either directly or opposite to what the dollar index is doing, depending on their relationship. Okay, so the dollar index and foreign currency have an inverse relationship. If the dollar is bullish, foreign currencies will sell, and if the dollar is going up, the foreign currencies will go down. If the dollar is going down, it's expected that the foreign currency, the euro, USD, GBP, USD, and the likes will go up if the dollar is selling. Okay, so where do you start your analysis on the dollar index? You start from the monthly time frame. You want to know the monthly order flow. You want to know what price has done in time past, what price is doing currently, and where price is trading into as the next draw on liquidity. Knowing where price is going to trade to as the next draw on liquidity is the most important thing every trader should learn to do very, very, very well. You should be conversant with the idea of studying order flow, telling where price is coming from, and telling where price is trading to next. Okay, so initially we've had price reacted off a premium bearish mitigation block there, created a displacement lower, consolidated, induced retail to take longs, and found resistance at the bearish order block right above, and created that massive short after trading into the bearish order block residing above. We've seen the dollar created that sell displacement, and it's a normal culture that for every time price takes out external range liquidity, we anticipate to see price trade into the internal range, drawn liquidity, the fair value gaps, or the other blocks. So that's why we're anticipating that the dollar is going to trade into that internal range before we short again. Also considering the current price range between the low and the high. If you look at that technically, price has actually traded into a discount. By discount, it means below 50% of the range and is sitting currently on a bullish order block. That bullish order block on the monthly time frame is what is supporting price action to retrace into the internal range inefficiency created above. So we want to go back above 50%, then we short again. We're looking at that fair value gap right there, fair value gap by the right, the fair value by the left. That's something you could just call IOFED, institutional order flow entry drill, and it's very powerful, especially when you identify them on the higher time frames, the monthly or the weekly time frames. They're magical, they're very powerful. Okay, then you go to the weekly time frame, and on the weekly time frame, actually I saw this reversal when it started happening very early with one of my students. We're having a session on one-on-one mentorship, and I identified that reversal, and I told her that this guy is about to start going long, and it's just so amazing to see how price has been playing to script just what we have identified. It's amazing to see how price has been responding like magic. Price has been responding like magic. Okay, so I just want to extend this. So I want you to look at something by the left. Price actually traded into a discount fair value gap by the left right here on the weekly time frame. Usually on the weekly time frame, you are simply paying attention to the current expansions and retracement that's about to happen. So the dollar traded into that fair value gap and created a rejection block. Why is it a rejection block? Because we've seen the dollar created a sweep of liquidity below that previous low there. Some of you can call it total soup. Price took out liquidity below the old low and created the swing low rejection candle. The swing low and the swing highs are actually reversal patterns that lets us know when price is about to retrace or reverse into towards the next direction. So price took out liquidity, and look at the rejection that happened. The three candle swing low with the middle candle having the lowest low, that creates the rejection block. There's a difference between just swing lows, and there's a difference between rejection blocks. Okay, you can have a swing low that is not a rejection block, just like we had it here, 1 2 3 with the middle candle having the lowest low. That is a swing low. But when it comes to the rejection block is actually formed after a sweep of liquidity, either below or above. There has to be a sweep of liquidity before it qualifies to be a rejection block. So price took our liquidity below, created the swing low. That was the rejection block. So I told my students that we're going to buy the dollar when price returns into the rejection block. The rejection block is marked between the low of the candle body right to the low of the candle wick there. Everything here is a rejection block, but there's a criteria for looking for entries within the rejection block. So that fourth candle there tapped into the rejection block, and boom, price action traded bullish, creating a bullish other block right now. So the dollar, it's bullish. Okay, no confusions, the dollar is bullish at the moment, and the previous week traded into the bullish order block, and this week we want to see this guy, we want to see this guy, trade below the candle close of the previous candle. Okay, so this was previous week, this is the opening, this is the close. We want to buy when price trades below the candle close. That would be a good entry. That would be a good place to look for shorts. So price has opened and has traded below that previous week's candle close. This range is where I'll be looking to get my long positions on the dollar index on the daily time frame and the 1 hour time frame into the next drawn liquidity. What is that next drawn liquidity? The old high there, the old high, and the old high, and the buy side liquidity pool there, also old high there. All that is going to be potential drawn liquidity, while price is trying to retrace into the monthly time frame internal range liquidity. You can see the weekly time frame is showing us the specific points we're going to be targeting as potential profit taking, or you take partials at this different liquidity levels. 1 2 3, the fair value gap above also, it's a confirmation that we have a drawn liquidity there, especially when you have a fair value gap residing above old highs or relative highs. That is a hack for confirming where the drawn liquidity is. On the daily time frame, What are you studying on the daily time frame? On the daily time frame, you're actually concentrating on market structure. You want to see price action create structure in line with the monthly and weekly order flow. So since the monthly time frame, we know we're expecting price to trade bullish into the internal range. The weekly created a rejection block. That rejection block confluence, we're shifting market structure bullish on the daily. So price traded into the bullish mitigation block right here with the fair value gap, while price was trading into the rejection block of the weekly. That very point was a bullish mitigation on the daily time frame. So this was a very good point to look for long positions on the daily and the 1 hour time frame into the next one liquidity. So what will I be doing around here? I would be seeking for breaking market structure on the 1 hour and returning to the internal range as my entries, while price creates the next expansion into the next external range. So price traded above the relative highs here, and of course what are we expecting? Retracement into the internal range. Okay, so price had retraced into the internal range, fair value gap here, and you know what, when you measure between the low to the high of this immediate price range on the daily, that's why we emphasize that when you are outlining premium and discount array, you do it on the daily time frame. So when you measure between the low to the high, we buy discount markets and we sell premium markets. So price has traded below 50%, not just below 50%, but inside the fair value gap, residing below the 50% of the daily time frame price range. So that gap there, this and this and this, so the gap there, price traded into the fair value gap there and created a bullish candle. Okay, what will I be looking for a buy on the daily time frame? I want to buy when price trades below the candle close, the previous candle close. So that bullish candle, this is the opening, this is the close. I want to see price trade below the close there, and I'll be looking for fair value or other blocks on the 1 hour time frame to take my buy positions in here into the next one liquidity right there. Okay, so going down to the 1 hour time frame, you can see we had a gap open, I think gap open higher this week. So price is traded below the candle close, previous candle close, and we want to see if we have something of significance that price would like to trade into. And right here, what I see is, there was a fair value gap right there. That gap opening on Thursday last week, price opened, that gap opened there. Right there, that between Thursday to Friday, that gap opened that we violated. I want to see price tap into that area, and it's also confluencing with the breaker, the bullish breaker right there. So I want to see price trade into this area, and I'll be taking buy positions on the 1 hour time frame into the next round. Liquidity, the relative equal highs right there. You can see that price action is not random, price is algorithmic. It's very easy if you understand how price works. Nothing is more important than a proper understanding of price action. Once you understand the narrative behind price delivery, beyond just market structure, you really understand how price works. Okay, so this is the EURUSD. The EURUSD, you can see we already had a cracking correlation on the euro because the euro was creating higher high in here. GBP USD wasn't doing the same even before that reversal started. You can see I outlined it. The GBP USD created lower high, so that was a cracking correlation between the euro dollar, the cable, and the dollar index. So already we've seen that happen, and price created shifting market structure bearish, traded into the mitigation block and the fair value gap, created an expansion lower, breaking market structure, we traded into the premium bearish other block right there. You can see that. So the most important thing is outlining your levels on the dollar index, because the dollar is the main driver. The dollar has to be ready before you're looking to either buy or sell any of those. And we want to buy when price trades above the candle close of the previous week. It was a red candle, the sell candle rather, price open higher, closed lower. We're above the candle close, then we look for short on the 1 hour. Okay, so my shorts, are not going to be ready until the dollar trades into that area that I outlined, that previous fair value gap. And if you look at the euro dollar, there's a tiny fair value gap above that was hidden. Okay, right now what institutions will do is they will induce the impatient traders to want to go long, go shorts very early, then boom, they're going to take out all the stop losses residing above the relative equal high, the old high, and trade into that fair value gap or the very short block there. Then they're going to start to sell. So I'll rather be patient. Even if I miss this trade, no problem, I'll look for the next opportunity, but it has to get here because that's the system that I understand, and that is my expectation. You better have an expectation and miss it than not to have an expectation and you're just chasing something randomly. Okay, then you're just chasing something randomly. Last week I had an amazing testimonial that I couldn't even share because many of you would not even believe it. My student who started trading with me in August, and she funded her account with about $450. Flipped that account to $20,000. When she was on 20K, I asked her to withdraw $10,000. Then she grew it again to $35,000. I asked her to withdraw $20,000. Then she grew that account right now to over $100,000 last week. And I asked her to withdraw $50,000. Some of you who would be doubting, I think I could just show you from some of the groups. Some of the group I posted that testimonial to. Okay, a lot of you will argue with some of these results because your mind cannot even contain these things. It's not something you've prepared your mind for. So when you see it, it's a norm for you to criticize some of these results. Yeah. So this was last week when she grew. This was last week when she traded the account and made $25,000 on that $10,000 equity that was left, and I asked her to withdraw $20,000 and leave $15,000, and she did just as instructed. Okay, it's really amazing to see these things because they are possible. This was when she traded the account to $20,000 and she made the withdrawal of $200 because we had a call and I asked her to withdraw $10,000. And you know what this lady uses? It's simple price action. Simple price action, smart money concept, the things that we're teaching. Okay, the things that we're teaching. So I'm going to indulge all of you, invest time to study, to learn, learn the concepts that we're teaching, because the concept that we're teaching really works. How do you know it works? Look at the testimonials everywhere. Okay, how you know what we're teaching is working? Don't look at our results. Look at the results of the people we are also training, the people we're having an impact on. That's how to tell whether or not the things that we're teaching is actually really working. All right, so that's it. Just make sure that you're constantly learning, you're studying the concept that we're teaching, and if you're not in any of our mentorships, please try to join any of the mentorships. You can as well send me a DM with the link, with the link on the description of the video if you want to join my one-on-one mentorship only for serious students, the one-on-one mentorship. You can send me a DM so we can also improve your trading. Okay, I think that will be all today. Just make sure you do your due diligence to study and wait for price to get to your desired point of interest before you engage. Until next time, I wish you good luck. Good trading. Stay safe.